Let's take it over to Alan Knuckman, the Chief Market Strategist at St. Paul Research. Alan, what's your trader talk on this day?
Hello, Angie. We're seeing some summer heat. Stocks are getting hot. We have the gap at 3,900 and the gap at 4,000 filled in the S&P. One day does not make a market or break a market, but this momentum, things are looking good for the bulls.
What else can you tell us as you're watching some of the trades that you've already put on earlier?
All right, let's talk about the macro market. Nice comeback and a bounce off the bottom. Now, confirmation would be a move up to 4,200 and above, that old congestion area in the S&P. Now, we used this as an opportunity last week. We took a 100% gain in Affirm, AFRM, and also Starbucks, SBUX. So we're selling too soon. Let's remember, we talked about we have plenty of time with our options. They're mostly all September and January, which still has 6 more months.
Alan, your new stock is Twitter, a stock that has taken a dive, especially with a lot of chit chat coming from Elon Musk as he was trying to buy that social media company.
All right, let's talk about this week's trade trigger. It is Twitter time again. One of our best trades of the year. Remember, we had Twitter call options before the Elon Musk. We saw in our smart money indicator that something was up. That ended up being a couple 100% gain in the right option. So let's look at this. I see Twitter trading between 30 and 50 for the last 6 months. It's consolidated between 35 and 40 roughly for the last couple of months. A breakout target's 45. There's also a gap up at 43. So the way I'm looking to play, our smart money indicators seeing their accumulation right now. I'm looking at October 35 call, and in the money option, October has 3 months of time, trading for about 8 or so. And again, a breakout above that 45 and that 50, getting back to that top of the range at 50, that option will about double in value.
What are your trading day takeaways for us?
All right, trading takeaways, a lot of positives. Number one, right rate. They've been able to thread the needle so far, and the market's had a very positive reaction. We've seen interest rates stabilize. Now, all mortgages are pegged off of the 10-year note yield, and that has dropped to 2.7%, new 3-month lows, and it's almost 25% off the top. That's a positive. Number two, halfway home. The NASDAQ is not a tech wreck. We saw Microsoft and Google both made $17 billion of pure profit for the quarter. The tech sector is now 15% off in 2022, but it is 15% up from the bottom. And number three, added up, it's a plus. Right now, the S&P is 11% off its lows, and it's 8% lower in the last 52 weeks. So we've had a major resurgence comeback. But more importantly, there's a lot of positives. Lower gas prices, lower commodity prices, lower yields, and also volatility. The VIX is 40% off its January top. So as we've seen before, lower VIX, higher stocks.
Thank you, Alan. We wish you nothing but great trades for the rest of the week.
Thank you.
Go to businessfirstam.com for where to see our show on TV.